TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 41, Nasdaq's off 15, S&Ps are down 9.5, gold contract down $14, trading at $1,089 an ounce. You have silver off 23 cents at $14.75 an ounce. Platinum down $7 at $9.42 an ounce. You got copper flat at $2.24 a pound. Light sweet crude down 41 cents, $44.79 a barrel. Bonds 10-year down 24 ticks, 126.02. The 10-year is taken out its lowest swing point. It does have lighter volume at this particular point, folks. We'll see if that stays that way the rest of the trading day. The 30-year is approaching its September swing low. That's down almost 2 full points, 1 full point and 26 ticks at 152.08. And you get King Dollar up 1,180 ticks at 99.23. Jobs number came out today, big jobs number. Bottom line, market-wise, what it did immediately is brought the S&P south. You're going to have high volatility out here. What we have had is this. We talked about the 3 black crows that are set up from the downdraft of the 19th and 20th of August. It looks like that's what's game right now. You get a slow roll out here. Really interesting on a Friday, too, because what you do have is that the market, of course, the last basically 4 weeks have gone topside since the downdraft of August. You get the roll up here at the top, you get a test at the top, you get a failure at the top, you get all of the above. What it looks like you're going to have out here today is that you're going to have lower prices with volume expanding as we go into lower price. We take a look at the bond market. So the bonds basically out here, you have the 30-year bond, or the 10-year bond first off, going into your swing point from the 16th. And we'll come into that swing point. It looks like it's going to basically stay under that swing point, which is 126.16, and that is set up higher yields and lower prices in the bond market. 30. Now, the 30 has been leading the charge, and the 30 thus far hasn't made it to the lowest swing point, which is bullish. We're at 152.09, 151.25 is that number. And when that jobs number came out this morning, what you have with the jobs number coming out, folks, is that the probability that the interest rates, short-term rates, will go up in December has expanded from 50% to 75%. When I say expanded from 50 to 75%, we're talking about the amount of wages that are in the federal futures market. That's how that shakes out. What can you expect with the market itself? Well, here, let's go to King Dollar first. King Dollar has been in an ABC structure on the way up. It's almost finished out. You have the wide price spread again out here today. It's overtaken its September highs of 98.56. You hit 99.47. The A to B equals C to D structure is 1.00. What I do expect you're going to see out here today is that you are going to see that expansion of volume. We'll see whether we get the expansion of price simultaneously. What we do have now on the daily as well as the weekly thus far is that you have a failure at the highs, a failure on the daily with lighter volume, rejecting higher price, a failure on the weekly with higher volume, with lower volume, rejecting higher price. And what that sets up lower prices coming at you. If you want to just see how nasty the market is, bottom line is that Valiant, the pharmaceutical, this is an equity that has gone in 2 months from 260 down to 79 yesterday. And this happens always when there's large corrections inside the marketplace. Bottom line, that was down an additional $17 yesterday. That was all about getting the CEO out of his shares. Goldman Sachs sold them out as collateral. This 10 a.m. update is brought to you every day by EverBank. For more information on the products they offer, you can give them a call at 855-750-4051, or you can visit us at everbank.com/TFNN. Have a great day, safe day. Look forward to speaking to you right back here Monday morning, 10 o'clock. If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.